belong to you, and I will mute if there is anybody that is going to be needing any kind of assistance. The general chat and our tickets are always open. If you're going to be communicating in the live stream chat, please keep it on topic. This is going to be, again, very, insightful. So I would like everybody to please be on their best behavior and don't distract anybody that's looking to engage and participate with the topics of conversation that are being discussed. So I appreciate that. And without further ado, Romano, we love you. We appreciate you. And let's hear it.
Okay, so let's begin. Today, I choose this day for the stream because it's a special day for regular trading hours. If anybody give me the correct answer for this, I will be giving you 1 month free for the tool. And
Damn.
yeah, if you don't have access to the tool. Yeah.
So what's the question
Yeah,
again?
it's about related to regular trading hours basically. Yeah, it's because it's past bank holiday. Yeah, this is something special for the gap, and it's something that I consider always during this specific week. Sorry, because it's a very short week for trading. If you move on to the regular trading hours today, you can see how the market was closed. It's closed since Friday, so we don't have anything from price action. Even if we had yesterday the market activities during the electronic trading hours or continuing trading hours, you can see how during Mondays, even if we had a small gap, this is a really huge update that Toodegrees did to the tool, because you can see how the developing gap here is actually referring to Friday, not yesterday. So if you are using the tool, this is the actual closing price from regular trading hours from Monday. But it's not like that because the market from the stock market is closed from Friday. Okay, so this is something that I am considering always. And the buy side liquidity and sell side liquidity from the bank holiday days, you will see that most of the times it will be attacked during one day of the current week. So even if we have this kind of protraction of or manipulation to the previous Friday range, inside of the Friday range, I would like to see in the next days if we can come back again to this area here. This is something that I call time-based delivery and price-based delivery. So even if we reach a PRA during regular trading hours, during electronic trading hours, this is it's being delivered on a price basis, but it's not on time. And this is important because I would like to see key levels being traded during regular trading hours. Okay, so this is important for me to annotate. And if you can see here, this is like the intraday layout that I use most of the times. Is basically I have the power tree on the daily chart and my indicator. Okay, so this is the hourly chart, Nasdaq. This is Monday's price action, and this is the sell side liquidity or previous day low on Monday. And the last down candle that was printing during Friday on regular trading hours was this candle here. See? This auto lock here. So this is a point of interest for me during the week. This doesn't mean that we are going to trade today, but at a certain point, I would like to see if we can come back again to this to take the bank holiday Imagine that you are a trader and you are taking long positions to the all-time highs, and you have your stop below these all lows here. So I would like to see if we can come back. This is something that I would like to see. Doesn't mean that it's a must. Okay, this is important. But yeah, so this is the last down candle from Friday. This is your last order block from regular trading hours on the hourly chart here. Okay, so even if we reach this part of the candle here, this week, you can consider this as an order block, but this candle was traded on a bank holiday when the stock market is closed. So I would like to see if we can come back again to this specific candle in order to accumulate and order pair these sell stops inside of the new week opening gap. That it's an area of fair value for me. Okay, so this is the new week opening gap of the current week, and this is where, if you think like this is fair value for the weekly candle, because it was the first open price from the week. So anything below here is discount for the current week, and anything above the weekly open, the weekly gap, is premium. Doesn't mean that we can't go long above the new week opening gap, but if you are, for example, a one shot 1 kilo trader, your first point of reference for the week is this specific gap. Okay, because you want to catch the weekly range. In order to do that, you have to position yourself premium or discount in relation to the weekly open. That is this new week opening gap. So this is important. So this is the levels that I'm looking right now on ES, sorry, on Nasdaq, and the same for ES. So on ES, the last down candle here was created during the market on close on Friday. Is this, and you can see how this candle is basically inside of the new week opening gap. Okay, so this is your high quality order blocks from regular trading hours. And if you look on the regular trading hours chart here, on ES, this is ES price action from Friday. You can see how this is a small range, and we have this imbalance here on regular trading hours. This is the daily chart using the power of 3. So if we are going to continue to move higher, I would like to see, that's what I'm telling you, if we can come back inside of this BC on regular trading hours, even if we are moving higher outside of the range on electronic trading hours. See? So all this price action from Monday to today, it's not something that I'm interested to see. Like, I'm not going to use like an order block or imbalance from yesterday or anything. Basically, I'm using the bank holiday as a liquidity for my expectations during the week. This is something important for me during this specific week, because we don't have like this specific framework for every week. This is just when we have bank holiday on the market, on the stock market. So this is important. And because I had some questions about this, the indicator, that why we are having like the development gap if the closing price was yesterday. It's not, because we are considering the closing price from this day, from Friday. Here, you see? Okay, so this is what I wanted to share with you about the bank holiday, and something that we are using inside of the community that we have, Trading Gaps. It's about understanding fair value. The same thing that I told you about the new week opening gap here, on Nasdaq and on ES. You can fractalize these new week's opening gaps or the fair value from the weekly candle, but using the new month opening gap. Okay, so you can use these gaps from the monthly perspective to frame the monthly candle, and you are looking to specific levels to know where you are in relation to the monthly dealing range. Okay, so the thing that I do is basically I consider the fair value from the monthly candle, where is the opening gap from the monthly in relation to the previous months, and where we are in relation to the external liquidity. Okay, and I was doing like from the monthly to new week opening gap, and from the new week opening gap to the new day opening gap, and finally to the external liquidity. But it's hard to keep the annotations like every day. So what I did basically is I framed the monthly fair valuation from my chart, and you will see that all these levels are aligned with new week opening gaps from previous weeks. So for example, let me show you. So this is ES, this is the monthly candle, all these candles are the monthly, and what I do is the closing price from January and the opening price from February, you are going to annotate the high, low, consequent encroachment, 75% and 25%. So basically quadrants of these gaps. And if you have in close proximity above the marketplace, you are going to consider the previous month. So we have here December new month opening gap inside of February. So what I do is I divide the event horizon between one month and another month, and quadrants between of them. And if we have another new month opening gap in discount in relation to the actual monthly gap, I'm gonna refer from this specific price point here to the previous month here, and the same thing, I'm gonna divide in quadrants here, and I'm gonna see how the candles they are closing and printing in relation to these specific levels, and this helps me to know where I am in relation to for example, the external liquidity. Right now on the ES, we are leaving the new month opening gap of December, and I was expecting to come back to accumulate more inside of this area because it's fair value from the month from December. So in order to go higher, I would like to see if we can come back here. Nasdaq did it. Okay, I was expecting to come back to this new week opening gap in order to move higher here. That it's very close in proximity to the event horizon. So we close above the 50%, that's the event horizon, to reach the external liquidity. We accumulate inside of this new week opening gap to distribute to the 75% of this gap, of this range. And in order to move higher from this specific level, that is the 75%, I would like to see if we can come back some discount array, maybe inside of Friday candle that I told you, in order to distribute higher. Okay, so let's take a look at ES here. So all this week was a hard week to read, honestly. Look at the bodies of the candles. It was a difficult week, but we created the new month opening gap and we were accumulating inside of this gap. And do you see how when we open on February, we offset this low here inside of the new month opening gap or the yearly open. So this is huge because you are taking sell stops in an area of fair value that is a monthly gap or monthly open. Once we did that, we didn't come back again. We were accumulating now from new month opening gap to the actual new month opening gap, and we were accumulating basically in the upper portion of this gap here. The only time that we have this candle closing here is because we close and we open, so it was a new week opening gap, and we accumulate the 50%, the consequent encroachment, and now we are moving higher. So we were not closing below the consequent encroachment, not a single time. And you can see the bodies. Take a look at the candle bodies. How many candles do we have? Once we close above this candle here, take a look. Not a single candle was closing of the 75% of this range. Once this candle this one was closing inside of the range between these two gaps. So we were trading inside here. It was an inside small candle. We take the low of this candle and accumulate inside of the consequent encroachment, but we close inside of this level. The next day we open, we reprice the new month opening gap, and then finally we take the buy side liquidity just above the new month opening gap again. And from here now we are trading into the event horizon between the external liquidity and this month here. So I think that the algo is listening to me. So now we are moving lower. Do you see how we are opening? This is a real new week opening gap on regular trading hours. This one, this layout. I follow the Monday regular trading hours gap, but this is not the gap from Monday. This is important. It's actually this small gap here. Okay. So this is the actual gap from Friday to Monday. You see how we reach now the consequent encroachment. So price, the algo is looking discount prices from from Friday. It's what I told you. I was expecting to see if we can come back to offset the sell side liquidity from Monday's bank holiday in order to use them to accumulate more. So now we are trading inside of the new week opening gap. We are trading inside of the new day opening gap, and we reach the lower portion of the regular trading hours gap. And look at the same time the candles, how we are respecting this level here. Now we have relative equal highs from overnight. We offset the sell stops and we reach fair value, that is discount prices from Friday to today price. So anything below the consequent encroachment of the actual regular trading average gap is discount. So they accumulate discount to distribute premium. What time of the day did London create the initial high? This one? Yeah, it was the London basically kills them. Let's wait for the first minutes of the open. Let's see what ES is doing. See how ES reached perfectly the consequent encroachment, and Nasdaq reached the lower quadrant. This is something that I consider a lot in my trading, because only with the few minutes of the open, I know that Nasdaq is a little bit weaker than ES today, because it's failing to reach discount, or Nasdaq did it first. So this is regular trading hours, remember. You see how ES is trading at the level that I wanted to see. That is the order block here from Friday, market on close, and we are trading inside also of the new week opening gap. So we reach this order block. We reach 50%, just a little bit of discount here, from here to here. And Nasdaq is trading in the lower quadrants of the gap. I have one layout for looking for correlation between ES and Nasdaq. It's this one. So it's easier. So you see how we reach these candles. This is the 15-minute chart. And the consequent encroachment, and we are trading inside also of the new week opening gap. And Nasdaq is trading lower. So let's see what price does from here. I don't know if anybody has some questions that I can help you to answer them, but I think that you are understanding the way I use the gap and how I read. This require a little bit like of experience, obviously. It's not like just you look at the indicator and it's gonna tell you when to long or when to short just because you have the gap. It's not like that. So no, I'm not. You see how we are reacting the event horizon here in the daily candle, how it's trading, discount, accumulating. If we reach the consequent encroachment and we offset the on the lows, would be the ideal thing to look for here. Now we are trading inside of the new week opening gap, and we are this down candle is supporting price. So you can use, let's see if the market wants to use this as a reaction block and you want to see this taken, but since we are looking at ES as a stronger asset in relation to Nasdaq today, maybe we can anticipate that we are going to use this as a reaction block, if you want to call it like that, even if I am not referring to these days to look for a PDRA, but this is how you are going to interpret the PDRA matrix, that this is a reaction block instead of sweeping these sell tops. This is something that the market can do today. You see how we are reaching the level, the quadrant of the range from the new month opening gap to the external liquidity. How this level it's aligned perfectly with the new week opening gap. So you don't need to frame the new month to new week opening gap, because the market naturally is going to do it for you, because this is algorithmic signatures from price. Is what I was trying to explain you from to the guys that are with me in my community, free community. If you want to learn or to read price using gaps like I do, we are sharing ideas and everything in a daily basis inside of my Discord, and it's free. So we have also from Friday highs, we open inside of Friday price action. Yeah. So beautiful. Now we offset the sell side from Mondays, and we reach the consequent encroachment of the new week opening gap. And we are 15 minutes from the market open. So even if my daily bias is bullish, I'm not gonna long this until we reach discount. What is discount? Anything below the consequent encroachment from today gap. Because I'm not anticipating a breakaway gap, because on Monday we had a bank holiday. So it's not likely to happen. Instead, I'm looking for the sell side liquidity from Monday. And now it's taken. So now we push the Monday bank holiday. You see? Yeah. Now we are trading in the auto block that I was expecting to be reached at some point during the week. It was today. You see, we offset the sell side liquidity from bank holiday, trapping the Monday's traders that they're trying to reach all-time highs, but they want to take first the liquidity from these guys and reach discount from Friday. Yeah, this is something that happen every time that we have bank holiday. Literally, like the day after bank holiday is a nice way to read like where is the buy side, sell side from bank holiday, and if I am bullish, I would like to see the sell side first too. And this is wonderful because we leave these highs perfectly, these buy side liquidity, relative equal highs. So now everybody's scared too long because it's big down candle. But what the market is actually doing is offset accumulation inside of fair value. So, and I use standard deviations, projections from the gap, to pair with some array that I can trust from regular trading hours and look for time. Even if a lot of traders don't consider macros, I see many guys saying that macros is not a thing. Believe me, they are a thing. You can backtest and look for data and you will see. So look, 950 macro begins. See how we are respecting the low of the new week opening gap on ES after taking the sell side. We are reaching from Thursday to Friday regular trading hours gap on ES. Do you see the upper portion of this gap? The 75% here? We failed to move lower from this level. Look the time. 9:50. Okay? Because the macro doesn't exist. Yeah, I love macros too. Yeah, me too. I'm a macro trader basically, but as you can see, my framework is very different. It's not different. I think that this is the way that ICT was trying to teach the 23 mentorship and 2024, considering both charts, electronic trading hours, regular trading hours, and gaps, and time-based liquidity, and macros, like the best framework. But if you are not good at lower time frames, like 1 minute or less, you can use another time frames like 5 minutes. I don't know, but so you don't expect Nasdaq to take the equal lows on 4-hour BC. I don't use 4 hours BCs because many of their arrays are not inside of the regular trading hours. So it's not like they don't work. But for me, in my experience, since I've been trading, I find out that regular trading hours is like holds more weight in the market. I don't know, it's maybe because we are trading a stock market index. So instead of having like a weekly array, then 4-hour array, and then hourly array, and then 5 minutes, and then 1 minute, I use new month opening gaps to frame my high time frame levels, and I use gaps to frame if I am premium or discount in relation to the weekly and the daily chart or the current session. So this is balance price range here. And we have this small fair value gap here. So if you are bullish, you don't want to see price come back to the lower portion of this imbalance here. So if you have another limit here and we are really bullish, you're gonna miss the trade. This becomes a balanced price range. So you want to use, instead of this one, this fair value gap here. And you can trust that price should not come below this one if you are really bullish. This is a price signature that the market should create in order to do that. This lesson is a lifelong lesson. I do every live stream that I it's the same literally. It's not because but every live stream that we did inside of this cave is calling price like this. So now this is something important. We are going to reach the new day opening gap here. You see? And look the 5-minute candle here. I don't have it in this chart, but look at the left here. And we are leaving the consequent encroachment of the new week opening gap here. You see? On the hourly chart. Let me put the 15 minutes instead. So if we are in a market maker buy model, this candle should be like the middle candle of the swing point. Okay, so you have 3 candles to make a swing point. The next candle can come back a little bit lower when this candle closes in about 1 minute. We are going to close and we can disrespect and completely go lower and take this low again. This is something that happens because we reach fair value, that is this new day opening gap here. Do you see? So in my protocol, I take partials when I reach an opposite area of fair valuation. Okay? This candle has no wick. Now, you see? No, I'm not a discuss guy. I don't need to convince anybody to the things that I trade. So 15 minutes candle, it's opening, you see? If we are going to move higher, we should not come back again. So now we are closing this busy. So I don't like that. So part of the protocol is once we reach an opposite area of fair valuation, like I told you here, look at the 5 minutes new day opening gap here. I immediately take partials and move my stop to break even. This is a must for me because we can use that specific level to do like what the market is doing. So bullish market maker buy model was invalidated just because we don't use this balanced price range as an area to create the third candle of the swing point that I was expecting here, you see? So I've been telling you what I was looking, where I'm looking for an opportunity, how I manage my position, where I take partials, how everything. So before happens, everything. Not a single thought here has been hindsight. Not a single one.
Up a one if you're still with us right now.
Do you see the candle of the body of this candle of the daily chart? You see the level that I have here? Perfect. And I told you, if I'm looking for higher prices to reach all-time highs, I would like to long below this level and reach discount from this level here. And it's happening right now. Now look at Nasdaq. And yes, ideally we should look for a kind of divergence between both of these assets in order to have like a confirmation that we are going to keep moving higher. But yeah, you have any questions about my framework or gap? Anything?
Pretty much walk the dog. I don't know how many questions you're gonna get.
Yeah. I'll be doing the same thing that I'm doing here, like at least one or two times per week inside of my channel of my Discord. So if you want to do this with me, you are welcome. So this is the opening range. This is a 10 a.m. open. your framework is very different than mine. I never studied RTH gaps, but I feel like it could assist my day trades once the weekly profile is confirmed. Can you explain the gap's general purpose? Like, does it act as a supportive resistance and efficiency that should be filled? Yeah. So, gap is a liquidity void for me. Okay. So, it's I think it's the strongest inefficiency that you are going to find in the market. So the market likes to doesn't like to leave like open gaps for a period of time, because we have certain gaps that like breakaway gaps, but that profile is very different. It's when you are living like a it's like a you're having like a market structure shift with the with gap. Basically you are not anticipating that the market should be filled, but most of the time the market rebalance all gaps that are open, or at least the 50% that is fair value. So you want to have like a rules. If you want to trade above or below the gap, you should look for certain things, because imagine that you are trying to long here at the open, but you know that you have a gap that it's fair value and it's a liquidity void that the market is going to try to rebalance that level. So basically the gap helps me to frame my dynamic intraday premium discount, if you want to call it like that. Okay, so once you have, for example, your like you are saying, you have your weekly profile aligned, you're gonna try to use the regular trading hours gap to, I don't know, for example, you are bullish, you are looking for a breakaway gap that is the profile that I told you, or a partial rebalance of the gap, like the upper portion, or at least the 50%, and then you can look for the price signature that you're looking for as an entry mechanism in order to take that trade. But basically I use gaps to frame real fair valuation from the monthly, weekly, and daily, and to frame premium or discount. So I don't get lost like trying to long, for example, above the gap, and I know that the gap's still open. If I'm not expecting like a breakaway gap, I'm not gonna take that long. What are your settings for the new day opening gap? I have five new day opening gaps here, and 2 degrees new day opening gap here. Settings for new week opening gap, I have all of them. I have 20 new week opening gaps. But you want to have like a layout with which everybody look. If you, I'm gonna say something that I've been studying. So here we go. The ICT, if you have like many guys here on the community calls like time frame alignment. Okay, so they say you have monthly array, you use the daily chart. You have the weekly array, you have the 4-hour array, and then you look for a 5 minutes confirmation. So you want to use similar way, the gaps. I have monthly gaps in a daily chart. You see? New month opening gaps in a daily chart. I don't need to annotate anything outside of my gaps and the range that I have here. Okay, so then I have in the 5-minute chart the new week opening gap, that it's a weekly array if you want to see it like that. Look, any weekly array that you're gonna find in this chart, in any chart, it's a gap. It's a gap. So you have this order block, it's a new week opening gap. You have this rejection block, it's a new week opening gap. You have this propulsion block, it's a new week opening gap. You have this busy, it's the event horizon between two gaps. So instead of having like all the PD arrays annotated in my chart, I already know that any price signature that the market does on the weekly chart is a new week opening gap. So instead of having like weekly and 4 hours, I have my 15-minute chart with the weekly new week opening gaps. So when you have a cluster of them and the chart is very like this, the only thing that you want to do is cut a little bit and have at least between 5 and 8. You see? The law of this week was created at the consequent encroachment of this new week opening gap. And for the 5-minute chart, we can use the daily new day opening gap as a daily array. So you have in your daily chart only in the 5 minutes the daily gaps. So this is something that I was looking at actually. This all stops and yesterday in my notes. But yeah, so I have new week opening gap on the 15 minutes, 5-minute chart, new day opening gaps. And if you want to have because if you have everything in one chart, it's hard to read price. So try to keep it like simple. Clean your charts. And also the indicator, many guys ask me, will display the previous gaps that remain opens to the actual price action. So if you have anything above or below the marketplace that remains open, you are going to have those gaps extended to the current price action. Okay, so this is how we respect all the time the 50%, the consequent encroachment, that is fair value from this day. Even if we were trading below the level, we didn't close. Not a single candle below this here. So another thing that you can frame is the event horizon between the gap that remains open and the actual. This is the event horizon, but this is like you don't want to do that if you are beginning with gaps, because you are going to have a lot of levels and you're gonna get lost. But yeah. Yeah, it's like alignment, time frame alignment. We're using this. Keep this imbalance in your chart for the current week. This is the first presentation from, no, sorry, it was this one. 1 minute chart. It's gonna be used if we are going to keep going higher at certain point during the week. We are going to have a really perfect, beautiful entry towards the all-time highs, and we are going to use this gap here, this imbalance. So I think we should do the giveaway. What do you think, hermano?
Absolutely, hermano. You want to give away one RTH tool to somebody that has a basically no subscription, and then we'll give away basically some extra days maybe to some people that do have the RTH gap.
Yeah, 100%.
Yeah, 100%. All right, awesome. That's what we'll do. So let me do the giveaway right now. If you guys have any questions though, please ask them in the general chat because they're likely to get, more or less lost within the next 3 minutes with everybody entering and stuff. But I do, before I put the giveaway there, it's always accustomed here. Like I just want you guys to be able to show some appreciation for the engineer. He's spending his morning here and giving you guys knowledge, wisdom of his own experience, his models, his personal insights, and a lot of gems and wisdom. I'm sure that most people have not looked at a bank holiday like this before, and should very well be a memorable day for anybody that has not seen this before. So, without further ado, we appreciate all the love. So yeah, I'll give 2 minutes for a giveaway winner. One Dynamic RTH. I'm gonna do it for. All right, here we go. So I upped it to 2 winners. So basically, good luck. You must not have a dynamic RTH already or an elite collection to enter. We're gonna do a separate giveaway for everybody that has an existing subscription to get free days. So just allow that one to pass by. We'll answer any questions in the next 2 minutes. But this is again for the people in the audience that want to be able to have an opportunity to try out the tool and a lucky chance to win a prize. So if you do have a subscription, we appreciate you not entering. There's going to be a separate giveaway, as I stated. So don't be upset. We're not looking to get anyone upset, you guys are going to get an opportunity to enter as well. So you just hit that party emoji, and then once you hit the party emoji, you get randomly entered into the giveaway bot.
Let's go.
So yeah, up to 2 people. So if you do have tools and you do win, like respectfully, you're just ruining it for somebody else. So just allow us to be nice in a very easy way, and you'll be able to also participate in the following giveaway. How many people took notes? Share some notes. Anyone that shares their notes will get either 100 to 200 XP, depending on how good the notes are. I know there's some people that are unavailable to take notes because they're in their working environments or such. So, anybody that can support other people and help uplift them, that is really rewarded. So I appreciate that. You got a question here, engineer, from Sponge.
Sponge, do not participate in a breakaway gap following a bank holiday. 100%. Use bank holiday price action as liquidity. We want to see price trade bank into a fair value prior to the bank holiday at 4 p.m. Est. Yeah. If bank holiday was Monday, look for fair value from Friday. Exactly. Do not consider longs until price is below the consequent encroachment of during the current regular trading hours gap. If you are not expecting a breakaway gap. Yeah. Do not consider shorts until price is above the consequent encroachment of the current regular trading hours gap. Yeah.
You got 2 winners in the house, Nessie and Pete. Are you guys both here? I see Nessie's typing. Pete, are you here? It looks like you guys don't have access to the tool, so that'd be awesome if you guys can win. Awesome. Really, really cool. All right, you guys can open up a ticket. We'll help you out with access. I'm gonna do a small giveaway for everybody that does have a subscription. This one's gonna be basically a flash giveaway. Give me 30 seconds. We'll do 2 winners. I'm gonna give away 3 free days. You subscription. And it's just awesome. You just like you join a live stream and you just have an opportunity to just extend your subscription by just participating and clicking a button. Like, take some notes, make it more insightful to you guys, but we're really here to help you guys.
Yeah.
Yeah. We've been getting a lot of live streamers too, so definitely a lot of opportunities for you guys. So give away 2 winners over here, 3 free days. You must have an active subscription to enter, so any Pro Plus, Premium, or Elite subscription. So Elite people, shout out to you guys. More interested in the sauce? Shout out to you, brother. That's why you're here to learn, and you're also here to get experience from other traders. Ask questions. I'm definitely here to help you out as well. Shout out Cameron. I see you typing. Good, brother. Hope all is well with you. Pardon that. When can you call with the owner of StatMap, Henry NC? Josh Yu will be live tomorrow. So Asmuth and Suzu. Asmuth, it doesn't look like you have a Pro Plus role, so I unfortunately can't add anything to your subscription. Suzu, you also don't look like you have a Pro Plus role. So unless you guys have not claimed your Discord roles, unfortunately, you guys can't participate in that giveaway because I can't add anything to your subscription. So looks like you have not even verified your account. So if you're unable to type, it's because you have not claimed your Discord role. So maybe that might be your instance. So just go ahead, go do the WAP and claim your Discord role. This is to help prevent scammers and to people that are not supposed to be in the Discord just randomly just typing things. So we appreciate your patience. All right, so without further ado, Hermano, you walk the dog. Um, I don't know how many reservations anybody can really have over here. Called out sell side. Deviations, beautiful responses to the gap deviations. Response from 1, come right back to the new day opening gap, head back lower, 10 o'clock, open, protraction lower to take out stops, rebalance into fair value and premium, broke lower, breaker, lower downside targets, clean price action, honestly, from 9:30.
Yeah.
Very, very nice. All right. Well, very cool to see everybody in the chat. I wish you guys all a beautiful rest of your day, your week ahead. Please be safe, and we will catch you all in the next stream. Armando, thank you. A lot of love in the chat. We appreciate you.
Love you guys. Thank you for your time and for being here. It's I enjoy to do this a lot of. Thank you. So
All
have
right.
a
Take it
one.
easy, everybody.
Bye. Have a wonderful day. Take it easy in the markets. Bye bye.
Bye bye.